the 10%. This is estimated to be the minority of all traders who can make money consistently in the stock market day trading. As for the other 90%, 80% of all traders lose money, and 10% only break even. Using basic probability, there's a good chance that you are part of the 90% striving to become the 10% who make money consistently. Within this video, I'm going to discuss some of the common mistakes that 90% of traders make, which results in them being unprofitable in day trading over their career. I will also provide some tips that I picked up over my 6 years trading experience, which could hopefully set you forth on your journey to becoming part of that 10% of consistently profitable traders. Given that this is my first well put together video, some of you guys might be seeing me for the first time here. You might be wondering, who the heck is this guy and why should we listen to him? So a little bit about myself. My name is Justin. I've been a trader for 6 years now, actually been trading since I'm 14 years old. By no means am I the best trader around, but through a lot of trial and error, I've been able to develop myself my own strategy that I've found that works for me and allows me to make money consistently in the stock market day trading. My goal with these videos is to provide you guys with a little insight as to what I have learned through my 6 years of trading, which will allow you guys to hopefully skip some of the mistakes that I made throughout my trading journey and hopefully fast track you guys into that road to profitability. So the first tip that I have, which should be a little bit obvious to become a consistently profitable trader, is mastering the basics. I cannot stress this enough. I've seen so many traders overlook the basics because they're looking for the fanciest new strategy or indicator. They're not sticking with the basics and really just locking it down and building a solid foundation for their trading career. So I would highly recommend starting off with things such as support and resistance and trend lines. From there, you can go to basic stock patterns such as head and shoulders, cup and handle. You can learn about the double top, double bottom, and all that. And the triangle is an amazing pattern to learn about. I would then break it down even further and learn about your candlestick patterns. This will help you to analyze the stock price action and sort of build a better picture as to what the price action is telling you. You want to learn things such as the shooting star, the inverted hammer, the bullish engulfing doji. You don't necessarily need a trade off of these, but simply understanding the concepts and the principles behind these candlestick patterns can definitely help you out as a trader. And finally, after you learn all of that, you want to learn how to analyze volume. Volume is one of the key factors of day trading, right? You want to be able to identify when there's liquidity in stock, when the stock has conviction in say a breakout or a reversal, which can be identified through volume. And just a little side note and a self-plug, I will be making videos in the near future actually going in depth and breaking these down. So if you want to learn more about these basics, make sure to go ahead and subscribe, and then you can get access to those videos as they get released in the near future. And the second tip that I have for you guys today is going to be identifying your trading style. And there are many different trading styles within day trading. There are many little niches and routes that you can take, whether it be breakout trading, reversal trading, momentum trading. There are so many paths that you can take. And a common mistake that many beginners make is that they don't realize that you don't have to trade every single style. You can choose a specific little style that works best for you, works best for your personality, and really just stick with that. As for me, I am personally a breakout trader. I like trading breakouts with support and resistance, as well as some other, sometimes I go into other styles as well. But as for specifically for day trading, I focus specifically on breakout trades, okay? So you don't have to cover them all. I would say find what works best for you, your risk reward tolerance, your personality, and really just stick with that. So after we've learned the basics and determined what type of trader we want to be, now we have to go in a little bit deeper and determine what our trading plan is. So the third tip I have for you guys is making your trading plan. Your trading plan is going to be your strategy, your golden ticket to say, that will be something that you can consistently follow to take trades in the market and hopefully produce consistent profits. Too many times do I see new traders take trades because they think it looks good or because of their gut feeling is that the stock will go up or down, whatever way they're trying to call it. This is something that I would completely advise against because it's not something that you can correct and it's not something that you can replicate over many trades. You can't replicate an entry on a stock because of a gut feeling. Whereas if you have a set trading plan, with a stop loss, a target price, an entry point, set reasons why you're taking a trade, that is something that you can follow consistently. And if you're making mistakes, you see you're losing money with that trading plan, it allows you to correct. Whereas, if you're losing money because you're taking trades off a gut feeling, you can't tell your gut, gut, come on, call better trades, right? Whereas if you have a trading plan, you can change and tweak that trading plan to make it work better for you and to make it more consistent and more profitable. As you gain more and more experience and knowledge, you can continue to develop that plan and make it, something that you can follow and trade more consistently. And continuing along those lines, there's a little mistake that newer traders typically I see make, and it's that they try to mimic the trading plan of other traders, typically those who are profitable. And while there's nothing wrong with this, the thing is that every trader trades differently, right? So if every trader trades differently, what is profitable for one trader might not be profitable for you. So I would highly advise against, solely taking a trading plan and following a trading plan because it works for someone else. If anything, take that plan, tweak it to make it your own plan that works for you, and follow that. And you can work off of the trading plans of those who have come before you. And there is no trading plan that's or most of the time there's not one that's 100% unique. Typically people learn from other traders, those who are more experienced with than them, and from there we adapt to our own trading style and our own personality, our own trading techniques, and we build off of that. And that's how you become more consistently profitable, is by learning from others but not focusing so much on what they do, and more so adapting it into your own trading style. So when you're developing your trading plan, there are some things that you want to typically look out for. Every trading plan is going to be different depending on the type of trader you are, but the main things you really want to lock in are these three things. First, you want to lock in, one, what's your entry going to be? Why are you taking the trade, right? You're not taking it because of your gut feeling. You're taking it because this criteria has been met. Second, you're going to be identifying what are your target prices. How do you identify targets? Is it in good risk-reward ratio, right? Whereas setting you up for success. Say you take 6 out of 10 trades are red, but your winners are 5 times greater than your losses. You're going to be consistently profitable regardless of having more losers than your winners, right? So making sure that you can set proper targets, and on top of proper targets, you also need proper stop losses. That's going to be the third thing in a trading plan that you need to have, is stop losses. Personally, I like to set my stops under critical levels of support whilst maintaining, proper risk management and risk reward ratios. There might be techniques that might work for you better, such as setting it under exponential moving averages, Fibonacci's, all that good stuff. But having an entry, a target, and a stop loss is going to be the three things that are going to be the most essential parts of building your trading plan. And for my fourth tip for you guys today to become a consistently profitable trader, it's going to be something that both new and experienced traders struggle with, including myself, right? This is something more that's easier preached than practiced, and it's going to be, don't trade off of your emotions, right? So they oftentimes say, trade like a robot, turn off your emotions when you're day trading, and this is very much true. The reason for this is because trading off your emotions can lose you so much money. I can tell you that off of first-hand experience. The reason being is that you oftentimes neglect or break the rules of your trading plan or strategy. And a good example of this would be what we call in the trading community FOMO, or fear of missing out. And essentially what it is when you, for example, see a stock that has already seen this big move, and you see this big move and you're like, wow, I can't believe I missed this, but what if it goes a little bit higher? And your emotion starts kicking in and you're like, man, I really want to be in this, I really want to make this money. And so you take a position that you shouldn't, right? Your trading plan tells you, only take it if it hits this criteria, if it hits this entry point, then you can take a trade. But you see all this big move, everyone's making money, so you want to make money too, so you take that trade. And guess what? Most of the times you'll end up losing money because you FOMO'd into that trade. You traded off your emotions rather than your trading plan, and it put you in a position where the risk reward was not quite in your favor. And it can go both ways. So on the flip side, say you took an entry on a trade and the stock quickly goes against you. You see the quick dip. Rather than following your trade plan, you sell before it hits your stop loss out of fear, right? That stock could literally bounce a cent above your stop loss and go to what would have been a green trade, right? It could bounce a cent off your stop loss and go to the moon. And you would never be able to predict that. So that's why you have to follow your trade plan. Pretty basic. Again, it's hard to follow in practice, but it's something that you really have to try your best to follow. If you want to become a consistently profitable trader, is to simply turn off your emotions and follow that trade plan that you have worked so hard to make, right? So do not, I repeat, try your best to not trade off of your emotion, And going into my fifth and final tip for you guys today, it's going to be something similar to what I was talking about in the previous tip, and it's going to be not letting the opinion of others cloud your judgment, right? So when you're trading, there are opinions all over the place. There's lots and lots of noise. And if you go ahead and listen to all these opinions, you're going to start to confuse yourself, and you're not going to be truly listening to what your own judgment and what your own analysis is telling you. And it's important to follow your own judgment, your own analysis, because, other people can be wrong. Even the most experienced trader, even myself, no matter who it is, no matter how reliable they are, anyone can be wrong. While I'm not necessarily saying don't take trades because of what others say, I'm just saying when you take a trade based off someone else's opinion, make sure that you truly understand why it is they're saying what they're saying and why they're taking that trade. Say, someone has a trade call out, say you're in a trading room, someone calls out a trade. It's important as a newer trader to understand why is it that this person's calling out this trade. Is it respecting my rules? Is it respecting my own trading plan and philosophy? And then once you identify, yes, it matches my criteria as well, I know why they're taking this trade, rather than just blindly following, then you can go ahead and follow the opinion of others, once you assimilate it to your own opinion. Anyways, guys, I hope that this video helped you out in identifying what it is that consistently profitable traders do to become, again, consistently profitable. It's not something that just anyone can do, out of luck. It's something that they have to work towards and put in an effort to obtain and reach that goal. I know we just barely covered the surface of these very intricate topics, so if you want to see more, make sure to subscribe, as I will be putting out videos consistently, going more in depth as to how to become a profitable trader, as well as into other topics of finance, investing, and personal lifestyle. And if you simply like the video, please make sure to like the video. That'll really help me out a ton. If you have any ideas that you want to see for videos or any questions, make sure to drop that in the comment section below, and I'll definitely make sure to answer your questions, and I'll gladly take those video ideas. But yeah, I wish you all the best of luck on your road to consistent profitability and becoming that 10% of traders who make money in the stock market.